Thank you for everybody's time. I know it's the end of the conference. You're probably keen to get out there and wet your whistle. I am as well. But again, thank you for attending. My name's Ali Haji, as introduced, Chief Executive Officer, Director, and Co-founder of ION Energy. The company's focus has been to look for lithium in jurisdictions in which we will require lithium. The company was co-founded with the hope and aim of finding lithium in Mongolia, and I'll touch on that as well as how we've progressed to become a lithium holder that is global in nature. I will be making forward-looking statements. Currently, we hold 110,000 hectares in Mongolia and about 6,500 hectares in the Northwest Territories. We've started exploration shortly after we went public in 2020, and we are building a portfolio of assets that is, as I said, global in nature and very close to the required supply chains for the expansion of the clean green energy revolution. In 2017, when I was in Mongolia advising a current gold producer, my chairman and I sort of looked at each other and said, well, the geology mirrors very much what you would expect to find in the Atacama, a closed basin environment, low precipitation, high evaporation, and as such, we visited with the University of Science and Technology in Mongolia and found that there were indications of lithium in various regions in Mongolia. We approached the government. They then worked with us to ultimately put up licenses for tender that we were awarded in 2019 and ultimately went public in 2020. I think it's important to talk about our team and who really drives our decision-making process around our technical know-how and expertise. What you're looking at here is a collection of individuals. I won't cover all on account of time, but I will highlight a few key individuals that I think are of relevance. Wendy Li is an individual that has worked between Mongolia and China, especially in the coal space with Noble Group, and she leads our relationships in China. From a technical perspective, we have Dr. Mark King, who is a brine specialist, an individual that was the qualified person at Neolithium before it sailed to Zijin for about $1 billion 2 years ago. We've also got Don Haynes, who is a hard rock expert, currently sits as an advisor for Lithium Royalty Corp, a Warta-backed royalty company with a market cap of about $1 billion. And then Dr. David Deek, who's very much a supply chain expert that helped build Gigafactory 1 for Tesla in Nevada. From a governance perspective, I think it's important that you have representation in the jurisdiction that you operate in. We've got 2 Mongolian board members, one of which is the chief executive of a gold producer, as well as an advisor to the Ministry of Mines. He was with the prior government. He was reappointed with the new government, so we are politically agnostic in nature, irrespective of which party is in power. We're able to get things done. We've got a couple of investment banking professionals, Anil Varach, ex-Goodman & Co., Joseph Gallucci, who runs the mining investment banking for Laurentian, and of course, Matthew Wood, a serial mining entrepreneur that is our chairman. He's had various successes around the world, more importantly in Mongolia, where he had a $500 million exit back in 2011, a couple of exits in Brazil, as well as Armenia. So an individual that truly blends the 2 skill sets of being a geologist as well as a serial mining entrepreneur. You must be asking yourself, why Mongolia? Valid question. 1.5 million square kilometers, of which only 1% has been explored. It's home to the 3rd largest copper gold deposit on the planet that's run by Rio Tinto. They recently consolidated Turquoise Hill, ultimately giving them 100% ownership and about an $8 billion investment in the country. So it certainly is one that has been de-risked by majors such as Rio Tinto. It's one that we've been operating since 2009 in. We have a commercially or producing gold mine in place today, and of course we hold 110,000 hectares in the lithium space. So not only can we find resources, we've been able to take resources to production, and with ION Energy, the goal of course is to have a hybrid approach whereby we're defining a resource, but we're also bringing in a JV partner to help us ultimately bring our assets to production. The asset that we went public with back in 2020 is Bawayul. It's 81,000 hectares, 23 kilometers from the Chinese border. Some of my prior presenters pointed out the gigafactories being built in North America. I'd like to highlight that China, for instance, each of those green spots that you see there represents a gigafactory. And so it currently consumes 53% of the world's lithium and refines in excess of 80% of the lithium that ends up in the batteries worldwide. So our proximity to that market, of course, is of importance. Our asset at Bawayul, historic work there was up to 811 ppm. We went public at the height of the pandemic. We were able to do some auger drilling across the asset and find grades of up to 1,502 ppm. Of course, very exciting. And for those of you that are following the clay space, Thacker Pass at 2,500 ppm, we're not too far off. We've got a bit more work to do on this asset, but it is showing promise, and of course its scale is undeniable. Our second acquisition in 2021 is Urgach Naran. This project is 29,000 hectares. It is double fault bound in a closed basin environment with visible salars on surface, very similar to what you would expect to see in Argentina at Centenario. We've done some work on the asset, and as recently as 2021, when the team was able to get out there, including Mark and Don, the gentlemen that I mentioned earlier, we collected a brine sample on surface at 918 milligrams per liter. Very exciting on surface, but of course that could be representative of an evaporation pond at surface that ultimately concentrates the level of lithium. We set up an exploration camp and we did some really incredible work, more specifically a geophysical program across the basin that's 100 line kilometers, giving us a volume indication of 22.7 billion cubic meters at 6.5 ohm cutoff. Why is that number relevant? A very recent acquisition by the name of Alpha Lithium for about $220 million had a volume of 1.9 billion cubic meters. So in terms of scale, this has the potential of being roughly 5 times the size of a very recent $250 million acquisition. We've drilled some lithological holes, and the grades that we're seeing there are about 360 ppm across the lithological holes. We've also seen that they are contiguous across that basin. The makeup of the lithological holes being gravelite, sandstone, and other porous material, of course, very similar of what you would expect to find in a producing salar. And that 360 ppm number is of relevance because if you were to look at Albemarle Silver Peak in Nevada, their average grade was about 121, and that is the only producing lithium brine asset in North America today. That's some of our equipment on site and the work, of course, being done. We've drilled our 3 water wells. We are in the process of extracting brine samples that will ultimately get assayed, and that, of course, would allow us to move towards an inferred resource. There is a plan to do additional drilling, that of which is being defined by our geologists, both Mark and Don, and we will announce that to market once it is finalized. So we've talked about Mongolia, and we did mention that we are now a global company with assets here in Canada. One might wonder why the shift from Mongolia to the Northwest Territories, and the answer to that is twofold. One, last year, the Canadian government decided that they were to forbid any Chinese investment in critical metals projects. And as a result, we had a setback that didn't allow the Chinese investors to invest in ion energy. But we were looking at a jurisdiction and a district in the Northwest Territories that the likes of LIF Power and PMET have secured significant assets. And of course, it is a jurisdiction and region that has been explored since the 70s, so one of interest to us. We were presented with 2 assets in that jurisdiction, one by the name of Bliss Lake and another by the name of Little Nahanni Triangle. We ultimately went forward with the acquisition of those projects this summer. They were highly non-dilutive, which is nice for a change, where we paid $100,000 in shares and $27,000 in cash in staking fees, so extremely non-dilutive to the organization. And of course, in terms of proximity, being as close as we are to LIF Power, PMET, Gamma, and various other players, once we start our program there in March of next year, if there is potential for pegmatite or spodumene on surface, of course, we will be speaking with our larger neighbors to look at potential consolidation opportunities as well. So that's the story in a nutshell. In terms of our cap table today, 65 million shares out, of which management and insiders own 25% of the company. We've participated in every round. We've never sold a share, and we buy on market. We've got a number of institutional members that, of course, are relevant, and I think that's important. They believe in our story, and they've still held their funds and their shares. You look at our chart at the bottom there, I think that mirrors just about every junior out there. So there's not much to be added there. And we're currently trading, I believe, at about 11 cents a share today. So a market cap of sub $10 million, despite having executed from day one on our asset and continually advancing each of our assets, more importantly, Urgach Naran. We've been rather aggressive, not a group that sort of sits on our hands. Based on going public in 2020 with 1 asset, we now have 4 assets, one of which is close to an inferred resource calculation, as well as 2 very early stage acquisitions here in the Northwest Territories. We are working with strategics around the world to validate the work that we've done at the asset level as opposed to at the pubco level, given the dilution that our shareholders will face, including ourselves. And we expect to announce something on that regard in due course, hopefully before the end of the year, but I'm not here to make promises I can't complete. As far as comps are concerned, I've talked about a number of them, but I think there's some on there that are of relevance. Of course, a lot of this information is on our website, and I would direct you to it. And in terms of what you can expect from the company, of course, the resource being a major sort of catalyst, some results from our drilling programs, perhaps an expanded exploration program at Urgak Naran, flow-through funding to fund our operations here in Canada, and we expect to get out to them in the spring when the snow has melted. Hopefully, I've highlighted the team is extremely experienced, not only in the lithium space, but in the commodity space as a whole. And knowing that this company was founded in 2017 when lithium was trading at $2,500 a ton, that's where we modeled it. We weren't a company chasing the high prices that we've seen in recent months or years. So we do know that we can be quite profitable irrespective of where the price goes. Thank you for your time.